Many investors and viewers, they like to call him the mid-cap king and the small-cap ka badshah. Porinju joins us. I mean, he is considered to be the foremost authority when it comes to understanding the cycle in the mid and small-cap stocks. Everybody is curious to know that is the party in mid and small-cap stocks over, and is this like 2018? Because the selling in last couple of days is a polite and a scary reminder of what happened 5-6 years ago.
Sorry. So, can you hear me?
Yes, you want me to repeat my question? Even it took me some time to also register the market fall in last couple of days, how brutal it's been. Do you think, okay, now the selling is something which was anticipated and expected, so nobody is surprised with it. It is the pace and the similarity of what we've seen in last couple of days is quite similar to what we've seen in 2018 when mid and small cap stocks, they got smoked. Are we in a repeat of 2018, or this is just a bad patch, more like a bad dream? When you'll get up in the morning, it'll be over?
I'm 100% sure it's not a repeat of 2018, which I have gone through and suffered very badly with a huge underperformance to the market. So I can definitely, I think that experience will make it more valuable from my point of view. This is every expert or fund managers or research analysts coming on your channel, Nikunj, and talking to you in the last maybe many months. They have been all questioning about the froth in the market, right? So that was almost sure kind of thing. But because of the technical factors of too much money flowing into the market, too many companies were trying to raise funds by QIP, all kind of things, and a lot of stocks were being managed by some investors or maybe some small operators. So it has gone into some kind of so it was a sure thing which was expected, and it happened. But this time, of course, I understand the last 3 days was too much really a big fall. It was almost like the 2018. But here, things have changed. See, I was just going through the Edelweiss report in the morning today. One of the reports they are talking about comparing the small cap and mid cap indices 2 years ago and today. 2 years ago in 2022, early 2022, it was around 26 was the price earning multiples for both small cap and mid cap. And surprisingly, the earnings of these companies in the indices, they have gone up by something like 65% in the 2 years, which is very unusual. And the outlook is also equally good and promising. So, and just for information, the P ratio of 2 years ago of this small cap indices and mid cap index, they have come down by 1%, around 1% or 1.5%. This will be a big surprise to somebody who is not following those indices and its valuations. So I feel, but at the same time, it's 100% sure there was froth, especially in many pockets. And overall, the number of new investors coming to the market was very huge. They didn't have that experience, so they are not seasoned investors or traders. Too many people entered into trading by opening an account. So the market breadth has significantly changed in the last few years since the COVID. So this is not going to be 2018 repeat. I'm telling you all the positives. Those who want about or caution about the small cap investing or the froth in the small mid caps, they have also been talking about a structural change happening in India, the massive scale up of economy and its growth. So all those positives are definitely there, and earnings growth is much bigger than the the prior period of 2018. So we have all the reasons to be remaining bullish, but this was very much required for a healthy kind of stock market functioning. And I appreciate regulators. They are doing things like an Indian parent when they see froth and too much manipulations, especially the SME kind of stocks. That's a wonderful thing they have done. So that will give a very healthy kind of a consolidation in the market in the coming weeks. And I would say for those investable quality companies which have got good fundamentals and value stocks, the correction is almost done. There can be some more little down, 5-10% up or down. But I feel this is the time to look for cherry picking of value stocks. with this correction, that kind of an activity, I think I am expecting that kind of a confidence also coming back. And I'm not talking about all these small mid caps or fallen will go up or what you call rebound in a few days or a few weeks time. There will be a consolidation. It's very good, very positive for the investors, long-term investors.
Porinju, so let's understand why the correction has happened. The correction has happened because market had become frothy. A lot of weak players had kicked in. It was more like a WhatsApp tip or a sip or a tip in a lift, which was prompting everyone to participate. But on top of that, the another layer which in a sense spooked the market was a comment from the regulator that be careful, be cautious. Mutual funds, they need to understand and manage risk. And mutual funds have stopped accepting inflows into small and mid-cap schemes. Few have started, maybe more will follow. When you hear this kind of an indication coming from the regulator and from the mutual fund industry, isn't that an indication that the small and the mid-cap space has neared a top?
No, in India, these stocks can never be the top if the so-called economic growth and the expansion in our economy in the next many decades, so the top may be for the time being. It can be there. That top may not be broken for the next few months. That's what I feel. There will be a consolidation, but India never has a top in the Nifty or Sensex or in a small cap index or mid cap index. The top till now, for a short period or medium period, that is possible. We are in a growth path, Nikunj. We all know it. We all are very excited about, the economic growth, what we are talking about India. It is so, it's so deep rooted. It's really deep rooted and strong. We cannot underplay this, this kind of a event happening in this one, as we discussed earlier, once in 1,000 years kind of thing happening in the next 1-2 decades. Let us forget about the Amidst vision or, $30-40 trillion economy. Let us not discuss at least during the bad times. It's good to discuss during the exciting bull time. Let us think about next, by 2030, we are talking about a $6 to $7 trillion economy. I don't think there will be much disagreement with this. We not only we are aspiring, we have got a very logical, kind of arguments towards this. Any, not just because we are patriots, we all wish good things to happen in India. Not just because of that. This is very logical conclusion. We will be a $6 to $7 trillion economy in next 7-8 years. So, using the word top for the market and all is not relevant for India, I'm telling you. And as I told you, the price earning multiples have come down in the last 2 years. As on yesterday, recently it was at the peak. It has come down to 2 years ago price earning multiple for the small cap index and mid cap index. It's a comforting space. At the same time, I had, if you remember, during the budget day, we were talking about, that froth again. Many people were focusing on that. There are a lot of companies, small companies, price being manipulated. Let us not forget that it's a truth. Price being manipulated may be too a stronger word for many companies. Sometimes price is managed for QIPs or preferential allotment kind of things, especially in the small and mid caps. It's hundreds of companies have raised funds. But this fundraising has made these companies fundamentally strong. And there is a macro tailwind with the economic growth projected and things happening on ground in terms of manufacturing or make in India theme or railways or every segment of the economy is booming, and it looks like it has just begun. It is not at the peak of growth. If you take in railway, in aerospace, or in defense manufacturing, or in generally the Make in India theme, it's only at the beginning of that growth period. So I strongly believe this correction and consolidation is an excellent opportunity for investors to do value investing, cherry picking the stocks, or doing bargain hunting in some of those small and mid caps going forward. There is no hurry. You do not hurry to buy today, tomorrow.
Okay, so I'm just going to take a pause here, Porinju. I just want to summarize the first leg of our interaction. A question I've been asked on social media handles, lots of WhatsApp, a lot of folks I've been meeting that, okay, is the party in small cap stocks over? Is this reminiscent of 2018 when we saw a brutal sell-off which coincided with an increase in small term taxes, coincided with a change in the tax structure, followed by a big spike in crude globally, and then there was IL&FS crisis. None of the sequence of events are at play. All the regulator has done is they've said that, look, the landscape needs to be monitored, and the regulator time and again has said that. B, in general, a lot of flows have come into small and mid cap stocks, too many and too few stocks are there. So mutual funds in the past also, it's not for the first time they've shut down inflows. Third, Porinju is clearly of the view that the excesses are getting weeded out. Stocks have corrected 15 to 40%, 45 to, even on an average, the correction is about 25%, let me put it this way. And that has just taken that excess froth which got created, and now mean reversion has started. So Porinju, now let's start the leg 2, which is that in this decline, where value has emerged, what is that you've been wanting to buy is now reaching your attractive price point.
Definitely, value has emerged, but more importantly, values will continue to emerge in the coming days and weeks. This is not going to get over in a day or two. So we can't expect a V-shaped recovery kind of thing. And see, one thing is very clear. Nifty and Sensex will not go down much. If our India growth story, if you believe in that. It has not shot up like small and mid-cap stocks in the last 2-3 years of rally. Have been very richly valued. I'm not telling it's cheap, but this rich valuation will continue for India. There is no doubt about it. And the money, there can be pores of funds flowing into the small and mid caps for the technical reason what you mentioned. But it's a question of time because the structural changes happening in a lot of small and mid caps. They are coming into a different growth orbit. So that is true. And their balance sheets have never been so clean and healthy. It's a very important aspect. In 2018, the balance sheets of these small and mid caps in general, there are strong and very bad and very good companies in a point of time. In general, it was much not so clean and healthy. Today things are different. The raising funds, they are bringing down the debt of the companies, and there is more order books happening in a lot of segment. And as I told earlier, this is only the beginning of a big economic upcycle. So these small and mid-cap companies, well-managed companies, some of them were worse managed. Now some of them are getting better managed, more professionally managed. Next generation taking over. All these things what we used to discuss many years ago, it is still relevant. Maybe it is more relevant today. Why should these promoters remain unprofessional, bad, and unethical when there is a big opportunity on the other side for their industry they are into? It can grow very well. There's opportunity. There is tailwind. Why don't they gear themselves and take advantage of that thing and create wealth for themselves and the shareholders? That is happening in hundreds of these small and mid cap. So that is why I told this is a great opportunity coming up, and we have a big March ending problem here. Because there is again a tendency to book profit. Some of them want to book losses to reduce the tax liability before the March 31st. So this technical factor also has contributed significantly for the last 3 days fall. Fall was inevitable. It would have happened in any case, but it became very sharp fall because of these technical factors, Nikunj.
Technical factors at play, the fall was inevitable. Just the ferocity of the slide is something that had us a bit worried. Porinju, hi, this is Anisha also joining the conversation. The last time we spoke, you were quite bullish on the OMC SPAC and select PSUs. Do you still concur with that view, or has it changed now with the run-up?
On the budget day, we talked about the OMCs and, I'm sorry, is it for me?
Yes, yes, Porinju, please go on.
I remember in the chat with Nikunj, I suggested 3 stocks, means we discussed 3 stocks. One was ONGC, that day it was 245, and I think today it is around 255, 10 rupees better. And EIH was a stock, the East India Hotel, Oberoi Hotels, we discussed casually during the chat. And that stock is up by some 15-20% from the budget day, February 1st. Another stock I was again, mentioning to watch was Piramal Pharma, which is down by maybe 10-15%. See, here the investable quality stocks which have got a growth and the price today which is aligned to that growth in the coming years, the projected growth. I'm telling you, the valuations are not going to come down. What we see today, around 25, 26 PE for these small and mid caps, it is definitely expensive. There is no doubt about it. But we can't talk about the historic PE of 10, 12, and 15 for these companies because their future trajectory has changed significantly. The future trajectory is going to be, deciding the price today. So those prices, the value, what we call, there is a vision and there is a value. So that value will be what we used to have at 12 PE maybe 5 years ago. Today, somebody may see that value at 25 PE. I'm not trying to justify the high PE of small and mid caps in general. Let us not generalize the small and mid caps in India at this point of time. This is a structural change happening in the economy. So there are some small companies are going to grow very big. I'm telling you, a company today with 2,000, 3,000 crores valuation, because of the huge long-term tailwinds and technology and the digitalization, all those, because of all those kind of things, a 2,000 crores market cap company can come in the Nifty after 10 years. That is the style Indian economy is growing. Don't underestimate those small companies just because they are small and mid caps.
Which is this 2000? You got me in the discussion. Which is this 2,000 crore company which has a strong probability of becoming a Nifty 50 company? Because if you have to be a Nifty 50 company, you need to have a market cap of at least 80,000-90,000 crore, at least 1 lakh crore.
It is. We have seen such things in the past, but at a much lower pace, lower growth rate. But the next 10-20 years is going to be of course, I don't have a particular company in mind, but this is some of those companies in the startups today, which may have a $100 million valuation on the funding, just because of that opportunity in India. And the way the government is encouraging such kind of startups and the kind of landscape they are operating in, the opportunities, I'm telling you, the 100 million can become a $10 billion company in 10 years. It's possible, especially in the technology side.
And since we have you here with us, Porinju, morning, let's also delve a little bit more into some of the other portfolio holdings, maybe some electronic manufacturing companies. What's the view here?
I'm not an expert in the electronics manufacturing segment, but there is a big scope. We have become a net big exporter of mobile phones. So there are many things happening, because I'm so excited the way government is creating platforms and atmosphere for these kind of companies in manufacturing to grow. It's amazing the kind of incentives given. So, this is people always try to pull down the government, or the regime on the social causes. When you give incentives in manufacturing, it's not given on religion basis or anything like that. It is for the worthy companies, for the worthy promoters, visionaries. So there will be an atmosphere created for growth in the economy. That is really happening on the ground. We can see that all the deserving entrepreneurs, the talented entrepreneurs, are going to make it really big for the economy.
Okay, so let's summarize our today's interaction. And no interaction with you is complete without reference to some stocks or reference to some themes. So let's not break the tradition, my friend. When you come, you have an image which you need to protect, that you'll help everybody with some money-making ideas.
See, along with the economy, our capital market also is going to have a massive expansion in terms of assets under management, the number of more investors, a lot of traders may go jobless after this big fall. I understand that, but it is expected so only, even otherwise. But the capital market activity, investing habits, AUM, all these are going to be, it's going to be expanding in a massive way. So, I was the other day watching that, one of the data point. The biggest AMC in India is below 1% of the largest AMC in US, Vanguard or BlackRock. Below 1% of the US AMC. It's not strictly comparable, I know, with the global operations by those companies. But still, that kind of a gap may not be there after 10 years. Maybe our largest AMC in India can be 5% of BlackRock. Why not? So I feel the AMC companies, listed AMC companies, I'm not holding any of them, seems to be an area to look for the investing. Be very selective. Of course, we have got very large HDFC or there are a few companies. Aditya Birla, Sun Life. We have UTA, Nippon. So some of those AMC companies could be interesting for the next 5-10 years investment. Well managed, and these are going to be well managed companies, institutionalized and well organized, with a high level of compliance. So these segments can grow much bigger than what they are today. It can be their AUM can go 5 times in next 5 years.
So AMC stock is something which is in focus. The AUM can grow meaningfully given the fact that the SIP flows have been strong and retail investors have definitely been excited around the market. Thanks so much, Porinju, for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.